Dornbush download number 89. Andrew and a
John.
more regular appearer now, post-council John Goulson. Thanks for joining us, John.
Pleasure. It's a pleasure.
Thank you for the opportunity. So I thought we might kick off briefly talking about shares, and that's probably more my field, but then we're going to talk a little bit about a new unlisted one that sort of caught your eye. We had the budget last week and a bit ago, and one of the main drivers there was around the healthcare sector, and we've really seen some real interest there. Michael was going to talk about Virtus, and I might let him talk about that one next week, but we've seen big kicks in the likes of CSL, in Cochlear, in Certex, Primary, and I think the budget was a lot more friendlier towards sort of the healthcare sector than what we had been anticipating. Turnbull coming to an arrangement with the pathologists, I think, is a positive as well. It is quite expensive, the healthcare sector, but given the sort of growing need for their services, the ageing population from a demography point of view, it makes a lot of sense. Probably the key thing though, and I'm sure you'd agree, John, is that there's poor yield. So if you're buying like CSL, it's a 1.5% dividend. So if you're buying those types of companies, I'm assuming like you have a more mature client base, you know, they generally don't tend to buy them because they're looking more for income. So it's probably more the younger ones. But having said that, from a diversification point of view, you might want to have a chat to one of us about getting healthcare into your portfolio. Anyway, that's the healthcare stuff covered. Main thing we wanted to talk about today was the new unlisted one called Charter Hall DAT
Direct
2.
Automotive Trust.
So tell us about DAT 2.
Just going back to what you're talking about, that capital growth story.
We're talking about capital growth for a minute.
In terms of the shares, I mean, that's wonderful and we all like it. The problem is it does go into negative territory, sometimes short term, but in the long term, we're still happy with that volatility. What I'm talking about is an investment which is off market. It's not tradable. In other words, you can't ring up and sell it. It's quite complicated. Usually it's a 5-year investment. And there's a good replacement for a term deposit. If you're looking at going into a term deposit now, you're flat out getting 3%. This is giving you about 7.5%, and the underlying production of that yield is the leasing of auto distribution centres. The actual tenant is Automotive Holdings Group, which is listed on the stock exchange.
AHG, Brendan will quickly pop our chart in here.
And it's actually a very strong company, and we're confident that they're not going to go into receivership.
Toes up.
So that you would have an empty building, and that's one of the problems, of course, buying these automotive trusts or office buildings unlisted, is that if you haven't got a tenant, you don't get a yield.
Because they're quite specialised, aren't they? Like It's not like Dornbush Partners could move in there next week. You really need sort of a like-for-like replacement. So that's why you need to be comfortable with the stability of the...
And we're not talking about putting all your money in. I mean, we're looking here at 5%, 10%, 1% of your money, which actually acts as a stable investment, capital growth fairly stable, and a good yield. So for people that are looking for that,
we've had a bit of success, even as I said in my little preamble, it's DAT 2. You know, we did DAT 1, I think it was late last year from memory, and that's performed exactly how we thought it would. But you, on a broader scale, John, have had a lot of success with this unlisted stuff over a number of years now, between Charter Hall, GDI, Heathley, Sentinel. You know, I think you've got a pretty good track record in picking those, to the point where accountants have sort of been saying to you, you know, clients who have just got solely share exposure haven't done so well, but overlaying it with some of these unlisted ones has really added stability relating to capital value, because as John said, there's no volatility there. But
That's right.
And you're talking about, you know, term deposits. I mean, 2.5% return. I mean, yes, they're safe and they're stable, but there's certainly no growth there. That's right. And if you look at these unlisted ones, they have been offering far better rates of return.
I mean, what we've done basically is send an email out saying, if you're interested, get in contact with us. The procedure is pretty simple. It's we send you a product disclosure document.
A PDS.
A PDS, which allows you to read all about it. We will then look at discussing with you whether it fits your investment profile. And if you wish to go ahead, the girls we'll help you.
Because they don't trust you and I to do the paperwork.
That's right.
We don't trust each other.
The application form will come from the people who are very thorough in our office, don't make mistakes, and you can write a cheque out or do a direct credit into the account. So think about it.
We've got a small allocation and it's about 5 weeks to go. So it only launched yesterday. So if you're interested, get in early, because there's actually also bonus units as well, isn't there? If you get in early, there's some bonus units. So have a chat to us about that. But certainly, given how expensive the share market is looking at the moment, 5,400 is probably looking a little bit toppy at the moment. Having a look at some of these unlisted things like the Charter Hall one might be worthwhile considering. John, anything else from you?
No, just ring us and talk about it.
Ring early, ring often. Till next week. Thank you.